Good morning, everybody. It is Friday morning. We've had another successful week of trading. If you took advantage of the opportunities that were in front of you that we talked about, and getting ready to roll out of the month of May and into the first month of summer. Life is pretty darn good when you think about it, and it's at moments like this that we ought to take time and pause and reflect about the awe and wonder that surround us really on a daily basis. It's pretty easy sometimes to get caught up in the minutiae and the details, but when you think about uh, life and all the opportunities and some of them not desired that we get to grow from, it is a pretty marvelous mechanism, at least in my opinion. Yesterday we completed the 2, 5, and 7-year auction. They're very, very strong auctions, and the market corrected yesterday. The stock market went on to new highs yesterday and pretty well held those gains overnight. Europe and Asia sold outside of Hong Kong as far as the equity markets go. The economic news out of Germany, they were looking for a positive retail sales number. Germany had minus 0.9%, much less than forecast. The Swiss KOF index was supposed to be at 102, came in at 99.79. So the economic news out of Europe favors contraction or economic slowing. So again, the underlying economic news and statistics do not reflect what the central banks, the IMF, the World Bank, and all the economic forecasts are coming. We didn't have growth in quarter one. We're going to get it in quarter two. We got this meme that comes out from central banks, and it is promoted and pushed by the press. And why does the press do that? So they can maintain access to these bureaucrats and ministers and central bank governors. I mean, that's how they make their living, right? Printing the news. So it's a very, very incestuous circle that we work with these days. And the governments hold most of the power, as they always have historically. And they're getting even more of it, which means that the press, both financial and the rest, don't really do the job that they were supposed to do and given the powers to do. Resistance is in this 26.08 area for sure, to maybe as high as 26.20. We've knocked on the top of it just structurally right here. Look at the top of this value area, how it held. We're a little bit below the value area for this breakout that took us to the highs on this particular move. So we got 25.04 is pretty darn important support, and 26.04 and up is where resistance starts. And we find ourselves right now at 25.13 at the bottom end of that range. A structural buy would be at 0.5. You know, if you're wrong, you're looking at a 2/32 loss max. A structural sell right now would be against this high volume number at 25, so a 24 sell. And a 5 buy would pretty much capture today's activity. So structurally, this is where we are. It's if the market is going to continue to rally and move higher, this 125.04 area can be retested, and if it holds, then the market is set to come back up and retest resistance basically at 126. Okay, moving to the F2 screen where we fine-tune our observations and our ideas. 4 to 8 is pretty darn good support. And my feeling is that the bottom is likely in. They took it a tick below the P period, then we started to move up in R. London kind of capped the rally at 16, right in this area. So right now we've got probably pretty darn good resistance at 20 to 24. And I think we got reasonable support at 8 to 12, but definitely down here at 4. So buying against 4. This is ideal. So our number 2 buy area is 1 to 5. And I wanted to show you that structure. And our number 1 buy area is 8 to 12. We're currently at 13.5. We've got a P shape in the overnight session. What's a P in a down market? Short covering. Volume is below the point of control or the balance point. So we have a sell. Now the aggressive sell is 15 to 19. The not so aggressive sell is 19 to 23. So I think we have a shot based on this P structure to get up and at least probe 20. And you can see the last rotate up in M period stopped at 20.5. And L period stopped at 22.5. So 19 to 23 is the desired sell point, but it may take a 15 to get off a short. I don't know. I think we can do better, but we'll just have to see. So we'll start off trying to sell 19s to 23s, maybe 15s to 19s. I don't know. Then I don't think we're going to get back up and retest 28 to the buck, but 27 to 31 will be sell too. So it's a little bit convoluted this morning. It's a little difficult to call, but sometimes we're dealt that. But ideally, I'm pretty comfortable with the idea of a short at 19 to 23. And we'll have to see how the market acts at 16, 17.5. And I like the buy at 5. I mean, that's just a very, very comfortable. That's where the breakout came from. If I'm right, I got a really, really very, very good risk-reward ratio. Very, very small loss going into it if I'm wrong. And that's the way you have to think. There was, I forget the name of the book, but it was a poker book that I was very conversant in when I played a lot of poker. And you took the odds of the hand filling versus the size of the pot, and that gave you your expected return. And then you looked at how much money you had to put in to have a shot at winning the pot. And if the amount of money you had to put in to call the bets or raise or whatever you wanted to do exceeded the pot, you didn't play the hand. And that's the poker money management rules are very apropos for trading. They work very, very well, money management wise. So we're at 13 right now. Again, the structural buy is going to be in this 1 to 5 area. Right now we're at 13, so why don't we, the idea of the knob spread will strengthen today. We'll make buy 1, 5 to 9, and then 29 to 01 for buy 2. It's a post-auction day. We usually have a trading range. We don't have a lot of activity going on. N stopped at 20, M stops at 23. We got a high. We're in the same situation. So I think we got a pretty good shot at 19 to 23. Now, if the E-mini starts to sell and melt down today, which I don't think is possible, we'll be shooting for sell number 2s. We'll get a good read back on that. So this is the way that I see the bond, pretty much as the note. Got a 12-point spread on the knob spread. And it might take a 15 to 19 to get off the first short in the morning. But I think as the day progresses, the P-shape overnight short covering will kick in and definitely support the market. Okay, big article came out in the major newspapers on gold. That could affect gold. Russia is actually withdrawing, or according to the article, substantial troops from the Ukrainian border. So one potential hotspot of the world has gotten pretty quiet. China, no news on China In Vietnam, nothing out between China and the Philippines, nothing out between China and Japan. So we're taking the war potential down, which eliminates some of the buying in gold, and we're left with central bank shenanigans, which probably will never decrease. So we still have stops below 50. So I like this 50 area, 52. Let them go get stops below 50, get a retest failure, a pretty sharp V bottom, and then get long, and then our 43, 45 for buy two, pretty much where we were last night. On the sell side, last night we liked the sell against 60, 62, and the overnight session high was 60. Way to go, Charles. Called that one all right. So we'll make it 58 to 60, sell one. And then 63, 65 for sell two. I don't think gold can take off and do much this morning. Now, June is going to be an interesting month for us because that's going to be end of the second quarter. And there's a lot of articles being written right now about stock and bond market strength into the summer. But when the correction actually begins, watch out. And that's kind of an interesting take. So what we have out there in the trading community and the rest of it is central bank concerns, central monetary concerns, and the rest of it are tabled for a while. We've got the momentum going in the markets, and that should continue. For those people that read fundamentals, and you read, I was reading an article on Chinese real estate, and the collapse it's not just a correction, it's the collapse. Even in Beijing, the capital, buy one floor, get one floor free. They've gone from 0 interest rates, 0 down, to buy one floor, get one free. Now, that's, as bad as it's gotten in the United States, it hasn't gotten that bad here. These bubbles that eventually are, you can delay economic consequences, but you can't put them off forever. And in China, they got their hands full. Okay, this 3590 area looks like pretty good support. It's where we are. We've got a B pattern. I'm not really too interested in getting long, but from a trader standpoint, can buy the 90 area to the buck. Like the 20 to 30, I sound like a broken record on the sell side. Last night we wanted to sell 15s to 25s. So it kind of split the difference, and then our 45 to 50 if we happen to break it out for sell too. On the buy side, we'll make it 75 to 75 plus or minus for buy two. And again, see a trading range with a lower bias in this market. The euro has been pretty quiet most of the time. Those that have just sold it and disappeared for several days have been the happy ones. It's been the way to trade it. Okay, looking at crude oil in a trading range with the article, Russian troops withdrawing from the Ukraine. We could have increased the cost for Russia, and we could have made it much more difficult for them, and not by putting boots on the ground, but by giving the Ukraine military weaponry. And it's just the way Russia and China and and Iran and all these people fight. Hey, we didn't do it, they did it. So, but we didn't do it. We said we would send stretchers, medical supplies, and the rest of it. So after taking the ability of the Ukrainians to defend themselves away from them, we offered them Band-Aids in return, which was a green light for Russia to go do what they wanted to do. So with the Russian troops being withdrawn from the border, Russia, mission accomplished from what I can tell. The Ukraine will be allowed to reestablish control in the eastern Ukraine. Russia's got the Crimea. The Ukraine knows Russia can come into their country anytime they want. Got to be careful. Can't make noises about joining the West. And life will get back to the way that it was. So right here we've got this seller 50 to 75. And the news supports lower prices this morning. So sell once 50 to 75, and then 04, 4 1/4, sell 2. On the buy side, I'd like to play for a little bit lower, so we'll make retesting support, buy 1 50 to 75, and then buy 2 will be 102, 102 1/4. And I like the buy 2 area because of this volume. That's where your tractor is. And we've got a good chance of getting down there. Right now, I think the trading crude is from the short side. Now, to everybody's favorite market. It's really interesting. When we do webinars on the E-mini for anybody and everybody, we've got 100 to 300 people show up depending on how new we are in their system. Yesterday we did why trade the bonds with Mirus and Trader Kingdom, and we had a little over 60. So really the easier market to trade, and I'm not saying it's a layup, has much less public awareness or trader awareness out there, especially amongst the beginners. But one of the things that came out yesterday was that yesterday's range, and it was a good day of trading in the E-mini, was 10 points, $500 for the day session, and it was a $1,000 day session in the 30-year. So there's a lot of opportunity to be made in the financials. You don't. Everybody talks about the Dow this, the Dow that, the S&P this, the S&P that, but you can have quite a bit more volatility in financials. Not day in and day out, but it's the equal of what you've got in the stock market, and sometimes greater. Okay, it's the end of the week. It's end of the month. Manager compensation. It's the middle of the quarter. 2/3 of the quarter is behind them, and we got June to get through. So I can't really see any heavy institutional selling in this contract until June is over. So the stock markets outside of Hong Kong around the globe are down on good fundamental reasons. They haven't crashed or done anything, and our market held its gains from yesterday. So my guess is we're going to close this baby above 1915 today. Now, I can sell failure to take out 18 to 20. Don't have any problems with that. And if the big players have their way, the normal course of action would be to take it down off the day session opening, spook the week length, accumulate, build a position, and rally it into the close for a new monthly contract high. You can see volume continues to move up in the distributions. Volume in the overnight session is higher than volume from yesterday. So we've got this breakout in this 13 to 15 area. That's probably our first pretty good band of support, and that will be buy 1. But I think there's some real opportunity in this 8 to 10 area right here, this buy 2. It'll allow them to get down into this volume area. It would take out near support in the 13 to 15 area. So I'm really interested in first initiating position in the 1910 area. But if we can't crack 13 on the way down, even though we have a B in the overnight session, I can get long there too. This market has made us pay up early to get long. It hasn't really allowed a lot of, I mean, you can see the low here in B period, the low in C and D, the low in C period. So, you know, the low's coming in the first hour of trading. That's been the pattern, followed by a strong close. So we have this first hour to make up our mind on how and where we want to get long and how to put it on. So selling failure to take out 18 to 20 is probably, once again, the easiest trade to see, but it's against what's been going on. The bias of this market is for higher prices. That's all I have for right now. It'll take at least 20 minutes to get everything posted and put up and around. Good trading in the meantime. Be back with you as soon as I can.